The number one concern of most retirees is running out of money. So what's the common solution? High dividend paying stocks. But the thing is your portfolio might be at higher risk than you realize. In today's video, we'll discuss the risks of high dividend investing and share with you a better solution that you can use instead. All right, Anthony, high dividend investing comes with its own set of risks. And one of the main risks, or the first risk we want to talk about, is losing purchasing power over time.
Yeah, so let's just start with an example. You have $1 million, we'll take the simplified 4% withdrawal rate, that equals $40,000 per year. But you need higher income. So what some people will do is they'll take that $1 million and put it into a high dividend stock, let's say it's 7%, and now you have $70,000 of income. Problem solved, right? Well, not so much, because your income needs to increase over time, generally to keep up with inflation. So take a look at these numbers. $70,000 of income in 5 years, then you need $81,000. After 10 years, you need $84,000. And then in 20 years, a whopping $126,000 just to keep up with inflation.
Yeah, and those increases are simply to keep up with the cost of inflation over time. And failing to account for inflation correctly is one of the biggest mistakes that we commonly see retirees make. And we wrote about that in our free guide, 5 retirement mistakes to avoid. Folks can download that in the description below. But let's move on to the second high risk that we see with high dividend investing, and that is dealing with stock price declines. And the analogy that I like to use is a leaky bucket, right? So you can keep pouring water in the top of the bucket, but if you got a hole in the side, this is a problem that you're going to have over time. And the truth is that a high dividend paying stock, people commonly misconceive this, is that a high dividend paying stock can go down in value over time.
That's right. I mean, making money in a stock is a lot like real estate, in that you have an income factor with the stock, its dividend, and then you also have the appreciation or the depreciation of the price itself. So let me put this chart up here. 2 common stocks that are known for high dividends, AT&T and Simon Property Group, which is a REIT, and it's compared to the S&P 500. In the top chart, what you see is the total return. And the total return for those 2 stocks is very slim, even with high dividends. And that can be common for high dividend paying stocks because they're paying out a lot of the money that they make, the excess profit, to shareholders and not reinvesting as much back into the company for future growth. The bottom chart, what it shows is simply the price projection or the historical graph of the price over time. And you can see that there's a significant decline because they've paid out so much of the money that they've earned to dividends.
Yeah, and by the way, if you're enjoying this content so far, please like and subscribe for more. It helps us reach more retirees like you, retire with confidence. And if you're a dividend investor, let us know in the comments down below, why do you think dividend investing is the best? We'd love to know your thoughts. All right, the third point we want to talk about here is high dividend investing may cause you to miss out on some really good companies. Now, certain schools of thought say, look, if I invest in a broad-based index such as an S&P 500 or even broader like a total stock market index, by doing so, it's inevitable that I will invest in some of the worst companies or some loser companies. But the thing is, you also are going to get some of the absolute best companies when you invest in those.
That's right. If you're overly concentrated in these high dividend stocks, what are you missing out on? Great companies like Amazon doesn't pay a dividend, Apple pays a small dividend simply because they know that they can put that money to work.
Yep.
And it's worked out for stock investors for them. Warren Buffett does the same with Berkshire Hathaway. In fact, they paid 1 dividend in their long history in 1967, haven't paid it since, and he jokes later that he must have been in the bathroom when they did pay that dividend at that time. And he says, basically, they want to take the money and they want to reinvest it into research and
Yep.
growth. They want to make acquisitions. And if they really don't have another use for the cash and the stock price is down for whatever reason, then they're going to buy back shares. So these businesses are like any other, is they want to get the optimal balance of, yes, paying out to shareholders in some cases, but then also reinvesting back into the company to get growth.
Yeah, absolutely. Well, let's talk about the fourth and final concern that we see here, which is dividend reduction. And the truth is that a company can reduce their dividends over time.
Yeah, and you may think that if you're invested in a high dividend company and they reduce the dividend, which they can at any point in time, that you can just take your money and go and put it in another company at that point in time. But we have to look and say, well, when would a company reduce its dividend? It's generally when it's under stress.
Yep.
So here's a chart of, again, two well-known stocks, AT&T again, and then Bank of America. AT&T reduced its dividend not too long ago. It still has a high yield, but it did reduce.
Yep.
And Bank of America, after the great financial crisis, was paying a high dividend, had to reduce at that point in time. And so what happens is if you're invested in one of those stocks and really relying on it for your retirement income, and they do reduce, you have to either take the lower income, which is not fun, or sell at a really bad time to go into something else, and you're taking a much lower value over to that new investment that you're making. Either way, it's a dilemma.
Yeah, I mean, I understand dividend investing. I mean, it's a relatively simple solution up front, right? I want to invest in companies that are going to pay out a good dividend, and that dividend is going to pay for my lifestyle. Now, again, unfortunately, we just see so many problems with it, and we do think the better alternative is a total return approach, but that does require a bit more thought and strategy to actually make it work over a retiree's lifetime. So if dividend investing isn't the solution, Anthony, then what is the solution?
The solution is being more diversified because dividend payers can be included in that. So you're eliminating some of the risk by being more spread out, and not only with stocks, but also having cash, maybe for near-term assets, maybe having some bonds, just really trying to find the right optimal allocation. And then let's go back to those four original risks. When you are more spread out is, okay, now you can outpace inflation. You can have market appreciation instead of that single stock depreciation risk. By being more diversified, you can more likely include the winners, because we don't always know what the companies of the future are going to be, really where the growth is going to come from. And then lastly, your dividend income is spread out. So if a company decides to reduce its dividend income, it's not boom or bust. You're more spread out. You're not reliant on just that one single company's dividend.
Yeah, and creating income is just one piece of the puzzle, right? Because if you have multiple different types of accounts, let's say you have retirement accounts and maybe some non-retirement accounts, not only do you need to think about how might you create income, but you also need to be thinking about, well, what account am I going to create income from? And we made a video addressing that specific question, which is early on in retirement, what might be the best account to take income from? Folks can watch that video above. Once again, this is Alex Okugawa from 1 Degree Advisors. And if you enjoyed today's content, please like and subscribe for more. It helps us reach more retirees like you retire with confidence. Thanks for watching.